commentator, is now joining us. Mr. Dennis, morning, and thank you so much for joining us here today on ET Now. First, your thoughts on the US equity, especially because the US government shutdown is now nearing its end. Your thoughts on whether this could aid US markets higher going forward?
I think it will do. I think what was interesting about today is you saw the Dow doing so well and the Nasdaq falling, as you said, and that suggests to me there was quite a bit of rotation out of technology into other sectors in the market, which are probably more heavily featured in the Dow. So I think there's some stuff going on beneath the surface, if you like, which might reflect concerns about the investment plans of some of these technology names, these MAG7 names, for example. But in general, I think the US market looks fine. And I think the seemingly, and one's got to be careful about saying this, but it does look like it does look like the US government shutdown is beginning to come to an end now. And if that is the case, that's going to support the economy because money will go out again for things like food stamps, and that'll support the consumer. And I think it's really what's going on as to why the market has been recovering this week.
Geoff, with the shutdown on the verge of being called off, do you think now the focus goes back to, I would say, to the interest rates and rate cut cycle? Because now that data would be coming in, you'll see the markets again focusing back whether the rate cut will happen in the December meet.
I think that's true, although I think the overwhelming driver of the market will still be the whole MAG7 and the AI story, and in particular, to what extent the investment plans are seen to be excessive and having a lot of these companies having to borrow debt, for example, in order to make these investment plans, and obviously some concern coming in about valuations. But aside from that, there will be a focus back on the Fed. I think there's still a lot of uncertainty, A, about when the shutdown will end, and secondly, when some of this blizzard of data that we're missing will actually come out. I'm of the opinion that a rate cut in December is not a guarantee at all. It is not a slam dunk. And the reason for that is because the inflation numbers are stuck at 3%. We are in a bit of a data fog. Certainly, the labor market looks a little bit weaker. But there is quite a precedent for the Fed to move twice and then to wait, either in the upside or the downside. So I think there's going to be a lot of attention paid to the Fed with the early December meeting. But I think a rate cut is far from guaranteed at this stage.
Are you also looking at some kind of profit booking in some of the MAG7, especially AI-led stocks, given the fact that in the last few days we have seen arguments on overvaluation of many of these stocks?
Yeah, I think so. I mean, I have a very simple view, and that is that valuations alone don't cause markets to go down, don't cause stocks to go down. You need a trigger. And it seems the trigger at the moment is number one, a bit of uncertainty about when the Fed will move again. Number two, concern about is the labor market telling us that we could be heading towards recession? And number three, suddenly, particularly on the back of the Meta's announcement a few days ago, are we now entering a period where these technology companies, especially these AI companies, are just investing too much? And there's concern about the pressure on resources, and of course also about the debt that is going on onto some of these balance sheets of these MAG7 companies. And so I think those are the reasons why you're suddenly starting to see a little bit less buoyant a view of the AI companies, and the valuations. Then, of course, people then say, well, with all these uncertainties suddenly kicking in, the valuations are certainly quite high. For the market as a whole, I see a recovery here because I think the Fed will eventually cut rates. I think the economy is okay. And I think basically some rotation now out of some of the particularly highly valued tech stocks into the rest of the market seems to me to make a lot of sense.
All right, so that's the view coming in on global markets. Geoff, thank you so much for taking your time out and joining us this morning on ET Now.